Hello, everyone. Welcome back to How to Short series. Unleash your trading instinct. We're shorting Apple. We're having a blast shorting Apple. We're finding intraday opportunities on a regular basis to pull profits from the market. I have some interesting developments to share to you. If you've been following along, you've been learning a lot, and we're documenting what we're learning to do some in-depth self-analysis, and that's what's really pushing our trading to the next level. So we added a little something today, so stay tuned. But before we get into the chart, let's take a look at our guidelines that we follow. This is the framework. We just don't short stocks just because we feel like it. We have a framework, which is they need to be at all-time highs. There needs to be a pivot, so there needs to be signs and signals of a trend change. And how do you identify that? By looking at various time frames. You'll see me flip through 5, 10, 15, 1 hour chart, 2 hour chart, daily chart. We flip through those because there's different levels that we need to look at. We need to identify those different levels, and it needs to speak to us and where to get in and where to get out. And so let's take a look at the chart so you can have some visuals of exactly what I'm talking about. Okay. So we didn't do a video yesterday, so let's take a look at what happened yesterday with our trading. So we immediately sold off in the morning, and that shook me a little bit. So I was like, well, I got in at 148. I don't want to risk a loss, so I will get out. So I got out of the day before's trade at zero. No profits. Well, I got to pay the fees, the commission fees. The brokers always win. And it just took off like a rocket, right? So it went to 149, and that's what I had set in the spreadsheet. I didn't follow it. That's going into lessons learned, right? And we're going to be doing some, when it comes down to some self-analysis, we'll be talking about that. And then what did it do once it got to the number, which was around 149.50, 149, it chopped around, right? And we can see that this is all-time high. And well, you can potentially short against that. So if you were willing to risk 50 cents to make, God knows, look, this is like $5 now, right? $4. That's a really good risk reward. We didn't identify that. We weren't sure exactly what was going to happen because technically speaking, this could be a bull flag. We had a break up candle. We ate time off the clock for the rest of the day, and then we closed. So 80% of the time, this is a continuation pattern. So didn't want to short it, obviously, but let's just go back here. What happened this morning? So part of the strategy that we talk about in every video for short selling is we look for breakdown candles. That is how we because it gives us something to trade against. That is basically our short signal. Should we short now? No, right now we're not shorting. Nope. Why? Because there's no breakdown candle. And you're like, well, how do I know that's a breakdown candle? Well, look how small these candles are. Look how small these candles are. Look how small these candles are. This is a break up candle, very big, right? This is a break up candle, very big. This is, breakdown-ish, yeah, but it's at the end of the day, so who cares? What we have here at 9 o'clock, right off the shoot, right off the open, the first 15 minutes, we sold 50 cents. We almost sold at almost closed that candle at the low. Now that we've been doing this strategy over and over and over again, we're seeing that it works. We're able to manage our risk properly. We can now start increasing our size because we felt extremely confident and we were only risking about 50 cents, maybe $1 max if we really have a reversal here. But we know where we would be wrong and we would just get out and we would minimize our risk. But we know 80% of the time, when there's a breakdown candle, we could short it, use this top. Let's put some lines here so you can get it, right? Use the top of this candle as you're out because it is a breakdown candle and it's almost at all-time high. So 150 is the all-time high. It's almost there. That's where we want to short. That's your best short opportunities. So we have a breakdown candle. We got in here. I think it was like 140. We were late to the party in the first candle here, second candle. We got in at, I think, 140, 148.40, I think. Something like that. So we got in here and we took our eyes off the screen for a few minutes and then boom, it's already at 147. So we just sold. We just got out of our position. So $1.40 in about half an hour or less is amazing. That's amazing. And then what do we have here? we chopped around. And what is this? This is a bear flag kind of pattern. So if you were late to the party, maybe you wanted to take on some risk. That's totally up to you. You saw this breakdown candle here. It's not really a breakdown candle, but you kind of saw there was another move. It looked like it was going to make another move down, and which it did. And what you could have done is use, if you want to be conservative, the top of this candle or the top of this candle as your limit. Once it starts closing 5 minutes above these candles, then to 15 minutes to the hour, that's really a signal that you need to get out. And what do we have near here? It looks like we bottomed, and where are we going to test? So we'll see at the end of the day. But this is an area where it can test. If we can start closing on a 5 minute, this is 15 minutes. So we're going to take a look here, 5 minutes. Take a look at this 5 minutes, another 5 minutes, another 5 minutes, and we're closing above 146.50. There is a possibility, 80% of the time, we're going to get 50 cents to 75 cents to $1 here. There's potential for upside. Later in the day, the moves are not so strong. We typically don't want to, but if this is something that you want to take on risk, or you want to be an active trader and try to pull as much money out of the market, as you can, that's the trade idea. But you first need several closes above this specific area. And where does 146 come from? Okay, I think this comes from this low here, but I wonder why I would have that there. But anyways, regardless, it's an area. 146.50 is an area of importance. You can see here we chopped around here. We bounced at the end of the day here, right? And then now we traded in and around there. So if we can get back around this 146, might trigger some bulls to get in, and we can get to 147.50. So before I end the video here, let's take a look at our spreadsheet. And look, we took more risks today. Boom. This is some bigger profits now. We had a little bit of it cost us around $400, $500 to pick that top. Now we found that top, and we've spent the last couple of weeks refining that's our strategy, putting, analyzing ourselves to see what we're doing wrong, what we could be better, associating costs to it to give it a sense of urgency and something to a baseline, basically, of what our behavior is costing us. When you write it down, you make it real. So it's motivating, it's working. So when we saw this breakdown candle this morning, we went heavy because we've been doing it, we've been repeating it successfully over and over again. So 1, 2, 3, 4, 5 times, right? And then yesterday, at the end of the day, we closed at 193 on Nvidia. Here we closed that right at the end of the day because we didn't want to take overnight risk. So that is a lesson learned that we're applying now. So that's going to be added as a successful completed lesson to close our positions at the end of the day, so we don't take overnight risk or anything like that. That is definitely worth its weight in gold. So thank you for joining. Thank you for watching. This is not financial advice. This is just education and for entertainment purposes, so we can learn together, grow together to improve our trading skills. Check my Patreon. I have multiple packages there to help you become a better trader, cryptos, one-on-one sessions. So there's a lot more to offer for you on that page. So thank you. Have a good day.